Is the housing bubble getting ready to pop? Well, a few people in the financial world, business world, economics world are saying that yes, the housing bubble is on the verge of popping, and we're already seeing asking prices dropping in some cities. So let's take a look at some charts, some information, and try to see if yes or no, is the housing bubble on the verge or has it popped? Let's take a look here. And let's start right here. Our friend Wolf Richter over at Wolf Street said the following: housing bubble getting ready to pop. Unsold inventory of new homes spikes to most ever, to the highest since 2008. Guys, 2008, that was the housing bubble doom year for housing bubble 1.0. We're now in housing bubble 2.0. So yes, the highest since 2008. 9 months supply on the market. Sales collapse. Prices below 400,000. Folks, please let me know down below, is this the turning point for the housing market? Now let's shed a little more light on this. New homes are a small portion of all home sales. So we can't just look at the new home inventory to decide if this is the bursting of the housing bubble. Of course, we have to keep an eye on prices. Now remember, a 9-month supply is much higher than we've seen over the past several years. 6-month supply is considered a balanced market, and now we're at a 9-month supply in new homes. But here's something else to factor in. New home sales only account for about 15% of all home sales, more or less in some areas, but overall it's about 15%, a little under 15% homes sold are new homes. All right, but here's the kicker. The median home price for new homes in April was $450,600. And that's still up 20% year over year. So obviously we have several months to go here before seeing how prices react to this rise in inventory. And with this current spike in inventory, the month to look at is going to be September. About 3 months will, of course, see if this was the bursting of the housing bubble. But just because home prices are falling for new homes doesn't mean there's going to be a correction for used homes. As we see, most entry-level buyers are buying existing homes and not brand new homes. Now, still on the topic of home price increases, I've got an updated chart here that shows us most of the major cities and how they fared in the first quarter of this year, 2022, year over year. Hello, I'm down here in Mexico. Hi, everybody. Let's take a look at San Diego first, where I'm at. And let's bring it up over here. And we are up 18% year over year. Let's take a look at Los Angeles. We're up 13% year over year. And this is pretty cool here, this map, and a link down below. When you click each city, it's going to show you the price increase year over year and the median price. Wow, Tucson, Arizona up 22% year over year. Let's take a look at Boise, Idaho. Boise up 16% year over year. Now, we did see some price deceleration after the first quarter had ended. The month of April and so far in May, prices really slowing down there in Boise. So when this is updated in a few months for the second quarter, we're going to see the true year over year numbers. And just about every major city is still going to be positive because this rise in inventory and the sales slowdown has yet to show itself in the median price. All right, one more here. Let's take a look at Dallas, Fort Worth, up, wow, almost 22% year over year. Now, because a picture is worth 1,000 words, let's bring up another chart here. This is out of Wolf Street. And we see the median home price now for new homes and the massive spike that we've seen just in the past couple years, and compare that to the 2007-2008 peak of the previous housing bubble. And this just shows you the magnitude of this price run-up that we've seen here recently. Also, let's talk about delinquencies. Delinquency and pending foreclosures are at a record low. In fact, as of April, the national delinquency rate fell to 2.8%. Now, with the recent rise in mortgage rates, this is going to take away the lifeline for a lot of homeowners. A lot of homeowners depended on these low mortgage rates to refinance their home, to stretch out the mortgage for another 30 years. also using these cash out refinances to pay off debt and to keep themselves afloat. Now with that lifeline gone, combined with the rising cost of living and everything else, we're going to see some very interesting things happen as homeowners try to navigate these waters. Now, of course, looking at home price and sales prices for the previous month, April, doesn't give us the full picture on where we're headed in this housing market. What we need to look at is pending home sales and how homes that are for sale right now, if asking prices are dropping, if sellers are lowering their asking prices. So let's take a look at some data on that. And this is getting very interesting. The number of home sellers who dropped their asking price shot up to a 6-month high, and that's 15% of all sellers dropped their asking price. That was during a 4-week period ending on May 1st, so the end of April. Now, as soon as we get more recent data than that, we'll let you know, but that is up 9% from 1 year ago, and that's according to Redfin. So 15% of all home sellers dropping their asking prices. Not a big number. Once we see that number get up towards 50%, that's when we're going to see a noticeable shift in the housing market. All right, so I still do not see a home price collapse in the cards. There's a lot of things being done to keep this market propped up, to keep the housing bubble inflated. One is we have FHA out with 40-year mortgages now for rescue programs and people behind on their mortgages for FHA borrowers. We also have the re-implementation of adjustable rate mortgages. I know that sounds crazy because of what happened from the 2008 housing bubble with these adjustable rate mortgages. Well, we're at a 14-year high now for adjustable rate mortgages. Also, the forbearance, the mortgage forbearance still isn't done, not just for FHA borrowers, but the regular rescue program that came out after the health crisis in 2020. There's still about 1% of all mortgages now. And yes, I know it sounds crazy, about 2 years, over 2 years now since the health crisis, and we still have about 1% of mortgages in the mortgage rescue, or what's called the forbearance program. And that's as of April. So as you can see, lots of things are being done to keep this bubble inflated. So please let me know what you think down in comments. Is this the beginning of the end of this housing bubble? Is this going to be a housing bubble bursting later this year in 2022? We've already seen consumers pull back spending on entertainment items and discretionary goods because of the overall rising cost of living. Is this going to spill over into the housing market? And is this the end of the housing bubble? Please let me know what you think down in the comments. I hope you guys like this update. Thanks for being here. Be well, stay safe, keep stacking. Bye for now. Peace.